If you're considering tax planning to make the most of your asset allocations, you need to have a good understanding of how your assets relate to taxes. A good way to gain basic understanding is considering the concept of the 4 tax buckets. The first bucket is your taxable bucket. So any accounts or financial vehicles that you pay tax on each year, whether you pull the money out of the account or not, falls into this bucket. So what does that mean? It might be your bank accounts like CDs. It might be brokerage accounts or mutual funds or bonds or even stock dividends. Anything that gives you a 1099 each year, even though you didn't pull the money out of the account. Maybe you're just reinvesting that money. It still falls in this taxable bucket. The second bucket is your tax-deferred bucket. Generally speaking, there are 3 primary vehicles that fall in the tax-deferred bucket. Qualified retirement plans like your 401k plans, 403bs, 457s, and IRAs would fall in this bucket. Non-qualified annuities also fall into this bucket, as well as savings bonds. Those are all tax-deferred, so they're all going to fall into bucket number 2. The third bucket is your tax-free bucket. There are 3 financial vehicles that are also going to be considered tax-free. Currently, that's municipal bonds, Roth IRAs, and properly structured life insurance. And notice I said properly structured life insurance. Nothing else is tax-free. In fact, municipal bonds are not always tax-free, but for the most part they are. Finally, the fourth bucket is income and estate tax-free, and that's where you get into charitable trust and other similar arrangements. Here's what you need to know. If you want to reduce your taxes on your assets over time, you need to move assets to the right. A common mistake many people make, if their objective is to reduce their tax liability, is often right here. They have a majority of their assets in qualified retirement plans. This has the potential to create a significant tax liability down the road. You may want to consider reallocating some of your assets to the right to help you reduce tax liability over time. That's the concept of the 4 tax buckets.